Good morning, good morning, good morning. It is January 29th, and welcome to our status review. So just a couple of introductory notes. First off, it is a pleasure to see y'all. We have a good attendance this morning. I expect it will keep increasing as we hit 10:05 when we start. Secondly, please invite your friends and professionals to join any one of our numerous groups because the groups keep on expanding. There's a lot of really amazing Facebook groups out there. I know that there is now Real Estate Strategies, the Real Estate Collective. There is now our Landlord Tenant Forum. The Tressa Forum is still there to answer your questions. And of course, there is our group, the Legal Professional Group. I mean, they're all run by different people, but I mean, we're all a family. We all kind of do our stuff together. And I would encourage you guys to get your knowledge where the professionals are, and these forums are where they are at. As always, standard warning before I begin, these sessions, even though our groups are private, these sessions are public. So please note anything that you say will be recorded and put out on any number of forums. And last, I just want to thank everyone because this is the first time that we are starting something in 2024. 2023, we had a fundraiser for breast cancer. And I just want to tell you guys that every one of you came through in a huge way. We raised over $25,000 simply by virtue of the ask. And I want you to know, on behalf of all the people who participate in these forums and who run these forums, it means the world to us. It means that you guys stepped up. No one charges for this stuff. We're all trying to learn together. But when the chips were down and when we asked you guys to give back, you guys gave back in a huge way. And it matters. And I just want to recognize that and say to everyone, thank you very much. So now on to what matters today, which is the status review. Unlike a formal presentation, I'm not going to have any sort of PowerPoint. Instead, I have a status certificate review that I'm going to take you through as we go through this. But before I do, I want to really, and I know we're going to have some lawyers on here, some junior lawyers. I know we're also going to have a lot of realtors. And the very first thing that I want to talk about is the purpose of a status review. Then I'll talk about what status review consists of. And then I will talk a bit about the particulars of a status review. So what is it that someone is asking when they go to a lawyer and say, please do a status review? Most people are expecting something that isn't what a lawyer provides. Most people are expecting a lawyer to say, your status is good. Your status is proper. And that's actually not the job of a lawyer. A lawyer does not look at a status certificate and say, this status is good. Rather, what a lawyer does is they say this status is compliant, and that is a difference that matters. You see, the purpose of a status certificate, first of all, is a public document authorized by Section 76 of the Condo Act. What this means is that there's no privacy associated with it. Anyone can pay $100 and request a status certificate from any corporation and receive it by law within 10 days. It is not governed by privacy legislation. And when they provide it, what they are providing really has very little to do with the unit itself, though it does contain one or two details about the unit description, and perhaps the condo fees that are due and owing. The vast majority of the information that is contained in a status pertains to the condo's health. And if you can imagine, lawyers who are reviewing these 2, 3, 4, 5, 6 times a day obviously don't have detailed knowledge as to the condo's health. So what a lawyer is actually doing when they're reviewing a status is they're making sure that the status itself is compliant with Ontario law. If a status is compliant with Ontario law, which I will go into in a second, then it is likely the case that it is in a good state of order, or that its deficiencies are properly highlighted such that a lawyer can, through a thorough read of the status, tell you what those deficiencies are. And so a lawyer's review to clients usually consists of two things. Firstly, or three things. Firstly, the mundane, which is, hey, here's what the product descriptions are, your insurance is in order, your Form 15 is in order, whatever is working and everything is fine. Second, deficiencies. Okay, the status has done its job, the condo has done its job, and in the course of doing its job has properly identified deficiencies. And third, and this is the critical component, identifying when the condo hasn't supplied the requisite materials required of it under Section 76 of the Condo Act. That is the job of a lawyer. And so when a lawyer reviews a status, which I'm going to do with you today, what we're really looking to do is to say, is everything in order? If it is not in order, please supply me with this or provide me with justifications as to why it's not in order. Once it is in order, everything looks good, or here are the deficiencies. Let's help you contextualize the deficiencies, something like litigation or something else. We'll talk about how we do that today. So that's the first thing I want to mention. I just want to mention what a lawyer is doing. A lawyer is not there to tell you the condo is fine. A lawyer is there to say, I have received the documents. The documents are in order or they're not in order. If they're not in order, please supply me with them so I can do my job. If they are in order, here's the deficiencies or here's a clean bill of health. And on the basis of this, you can now make your decision to proceed. Okay. Now, when we get a status from a client, it is often the case that we are getting a status that is anything but actually in order. And the reason for that has to do, firstly, not with the condo, but more regularly with the fact that agents don't understand what a status certificate is. They believe the status certificate is this, known as the Form 13. And you'll see it is these 4 or 5 pages. And it gives a lot of information. Tells you what common expenses are, budget. We're going to talk about what the Form 13 is. But that's usually the biggest problem that we have as lawyers is that very regularly agents only send us this document. When in fact, if you read through the document on Section 27, sometimes it's Section 33, but it's always at the end of the status, there is something that says attachments. And the attachments say the following documents are attached to the status certificate and form part of it. A copy of the declaration, bylaws, and rules, a copy of the budget, the audited financial statements, a list of current agreements, a certificate of insurance, and a copy of the Form 13. That is to say that there is really no way to review a status certificate with only the Form 13, the 5-pager, because this 5-pager necessarily has these attachments that form part of it. And so when you get a status certificate, it is actually a very large document like this, right? It has all of these documents in it. And if you do not supply those documents, these are not like filler documents. These are critical to a lawyer being able to do their review properly. A good way to tell, by the way, if you have a lawyer that knows how to do a status review is by providing them only with a Form 13 and seeing if they actually just comment on that and say, you're good to go. Because if so, never use that lawyer again. Some lawyers don't really know how to do status reviews yet. They're still learning. Everyone's junior at some point. So my point is that the first thing the job of an agent is to actually make sure that they are assembling the entirety of the status and not covering off the zip documents and not including that because they don't think it's relevant. It 100% is relevant. So that being said, I'm going to just pause for a second. Does everyone understand the purpose, the job of the lawyer, and the documents that we need supplied before I start going into those documents and commenting on how we review it? Anybody have any questions? No, we're good. Okay, fine. So that being the case, let's turn our attention to the Form 13, the 5-page document, the review, the highlight document, to take a look at what it is that we are reviewing and how we review it. So the very first thing you're going to note is that this is a real status certificate. It comes from a real unit. It's going to identify personal information, or at least personal information for the person who owns the unit. Do we care about that? We do not. This is something which, even though it was given to me as a lawyer, is perfectly valid to share. This is public, like the land registry. I'm allowed to pull up anyone else's land registry title and show that as well. I can do this here. Now, I don't do it for my own personal clients because I have obligations to them, but this happens to be for someone else that wasn't my client. So I'm using it. I don't know what we're going to find. I actually haven't even looked up what the status is. We're going to do it together. So you'll see that the very first thing it does is it describes the owner and what they own, which, by the way, should be verified as against the actual agreement of purchase and sale that you guys are putting together. It is the case that agreements of purchase and sale sometimes do not contain the same ownership numbers as you see here. That is to say, this may very well pertain to unit 1901, as opposed to what you would expect, which, oh, sorry, it's level 1, unit 20. So you may think that this would be 120, but it may be 119 or 118 or something very different municipally. The municipal address does not in any way denote the legal address. There is actually a way, by the way, for lawyers and agents to determine where a unit, what the municipal address of a unit is, and more importantly, where your parking spot is and where your locker is in a condo. It's not part of a status review. I'm just going to bring this up just because you should know it. If you pull title to a property, and we can talk about how to pull title later on, particularly to a condo, there is a document registered as one of the first things on the condo called the condo plan. And if you pay $3 and pull that instrument through Geo Warehouse, again, I can teach you how to do it if you have questions. That document will net an actual physical description of the parking spaces and the lockers, like an actual map with the numbers. And so you can match these numbers up to that actual description and depiction, and it will show you to make sure you know that your locker's in the right place, to make sure that you know where your parking spot's in the right place, and to make sure that you know that unit 20 level 1 actually refers to unit 119 at the condo, and that's appropriate. If you wanted to go that route, that's the job of a lawyer, not a realtor, and that's done during if there's any discrepancy or with a title search. From your perspective as agents, what you care about is making sure that what you see here matches the agreement of purchase and sale. Now, note that a standard form 101 says that parking and lockers can be owned, exclusive use, or assigned. If a parking spot is assigned, or exclusive use, it may very well not show up as an ownership interest. Sometimes condos are deficient in the way they write this. If they have assigned parking, meaning that by virtue the condo has given a parking spot that they own to the unit owner for their use, it may not show up here, even though there is an assigned parking. And so you have to kind of work yourself through that. You can do that with your lawyer. I'm just pointing out that all owned units will be here in the common expenses. And then, of course, the next line, which again is easy for you to verify, but should be verified as against the agreement of purchase and sale, is the amount of the common expenses for the unit, which should reflect in page 2 of your Form 101. Oftentimes, you will see that the amounts due and owing for common expenses are slightly higher than the amount contained in the agreement of purchase and sale. If that happens, just to give you a tip, that most regularly happens because at the time that the agreement of purchases, at the time that the MLS listing went up, the budget for the new year had not passed. So if you think about it, if you list a property in September and the end of the year in the condo is September 30th, meaning that come October 1st, the condo fees go up by the new budgeted amount. The amount that is usually brought as part of the agreement of purchase and sale is the September amount, the amount recorded on MLS. But In October, when the offer is actually brought, the condo fees are different, and thus the status review nets a slightly higher amount. Agents and lawyers should not freak out about this. Everyone understands that these things go up every year. And oftentimes that is an answer as to what the discrepancy is between the amount that is contained in the MLS and the amount that is contained in the status. I'm going to pause. So far, this should all be basic stuff for you guys, and you should understand what I'm talking about. But, and I probably shouldn't have prefaced it that because that's not going to encourage questions. But does anyone have any questions so far? Okay. Next, it then talks to us about the budget.
Hi, I have a question. I'm sorry.
Yeah.
I was just putting my hand up. Okay, so I have a condo for sale with a status certificate that doesn't show that there's an ongoing lawsuit. But I guess maybe it shows deep in the other documents. I was just wondering if that
You'll
is that
permit me, Kat. That's a very valid question. I'm just not there yet. I intend to
awesome.
I
Thank you.
intend to deal with that.
Amazing. Thank you.
Okay. Next, we have the budget. And you will see that the budget usually is something actually that lawyers often gloss over unless there's something that sticks out. And the reason is because it's very easy to balance a budget. A balanced budget is just projection. It has no bearing on what the reality is. All you're doing is you're basically saying, thank you very much. We're getting in this many condo fees, and we're going to match it as against our expenses. It's actually quite rare that you have a budget that doesn't match just because it's a projection and it's not hard to do and make those projections match. In fact, the condo fees are determined at the same time as the budget. And so generally, if they aren't matching, someone will raise the condo fees to accord for the budget. So the budget is most regularly actually in balance. Where we see that it isn't in balance, and I'm not going into budget too much right now, is where there was a previous deficit or there was a previous surplus in the previous year, and the budget is actually accounting for that. So if in fact there was a surplus of say $10,000, there may be a budget this year, a planned budget deficit this year of $10,000 because it balances over the course of the 2 years. So sometimes you do see that, but it's very rare to see any problem in the budget simply because the condo has such control over the budget, the projections, and the condo fees. And because the budget is presented at the same time that the condo fees are being made, if there is a problem, it's usually countered by heightened condo fees. So we don't usually see a problem. Where we do see a problem, where the condos can't finagle an answer, is in the reserve fund and the reserve fund study. And I'm going to spend a little bit of time talking about this. Your condo fees, broadly speaking, divide into two very specific areas. One is the ongoing needs of the condo, and the second is the capital needs of the condo. So if you think about it, just take a normal condo building. There is someone who sits at the front desk. They're paid biweekly. There is grass that grows. It needs to be cut monthly or weekly or whatever. There is garbage pickup that's done weekly. There's an elevator that's going to break down. That's a capital expense. There's a roof that needs to be replaced. That's a capital expense. The balconies need to be replaced. That's a capital expense. There are two buckets of expenses. Now, all things being equal, the guy who sits at the front desk, the person who cuts your lawn, that is going to basically be accounted for out of the condo fees. And it's not going to go up very much year over year, except by roughly CPI, right? Like, so it goes up by inflation. So if the cost of services goes up 6%, then the cost of that bucket of expenses usually goes up by about 6%. It's the capital fund of the condo that goes up wildly high if there are deficiencies discovered that haven't been budgeted for. Under the Condo Act, there is a specific way of doing this. Under the Condo Act, every 3 years, an engineer must review the building. Note, not go into the building. There's different types of reviews. It's beyond the scope of today. But an engineer must review the building and must say, with their engineer stamp, I have reviewed this building and I have verified that over the next 30 years, the following capital amounts are needed to accord for the repair of the condo. So literally an engineer goes through and says, okay, in year 5, the elevators are going to have to be replaced. In year 10, the balconies are going to have to be replaced. In year 15, the boilers are going to be replaced. And in year 17, the roof is going to be replaced. The cost of the roof repair is going to be this in year 17. The cost of the boiler repair in year 15 is going to be this, so on and so forth. And basically he says, given a discount rate, which is the cost of money every single year, we need the following amount of money to be put into our capital account called the reserve fund every single year to account for the 30-year needs of the condo. And every 3 years, the engineer revisits that analysis because it can change, right? Like maybe the roof had significantly more wear and tear than 3 years ago, such that instead of it being repaired in year 17, it's now going to be repaired in year 12. Well, that affects the capital accounts. So every 3 years, you are doing a new 30-year analysis of the building, of the capital needs of the condo. And that is the second bucket of condo fees. The second bucket, the first bucket is the ongoing maintenance fees of the building. And the second component of condo fees, broadly speaking, is the capital account called the reserve fund. And the job of the lawyer is certainly not to tell you that $603,856.32 is the required amount that needs to be in the reserve fund as of September 30th. Because after all, how would the lawyer possibly know that? Lawyer can't know when the elevators need to be replaced or the roof needs to be replaced or anything else. No, what the lawyer is verifying in this instance is that pursuant to Section 76 and pursuant to the Condo Act generally, an engineer has done its analysis in a timely manner, has taken that golden thing called the engineer stamp and said, I attest to this. And that number made sense and was approved by the board. Sorry. I'm sorry. I have an office dog and it is mail time here at the office, so I apologize. But mail has now been delivered, so we have quiet again. I'll continue. So, the job of the lawyer is to verify that an engineer has been through the condo in the past 3 years and has stamped that the 30-year needs of the condo are met with a proper allocation of dollars to the capital fund, the reserve fund. So let's take a look at what that is. And this is the Form 15. I'm going to find the Form 15 here, if you do not mind. Here it is. Here's the Form 15. So here it says that our site review has been done on December 1st, 2022. So as a lawyer, I take my little magnifying glass out and I say, aha, it's 2024 in January. Thus, this has been done in the last 3 years. No problem. That means an engineer has been through in the last 3 years. And look at what the engineer is saying. It's saying that of an average condo fee in the building, approximately $229.47 of an average condo fee is currently going to the capital account, to the reserve fund study. In 2023-2024, which is past, $31.90 increase to that $229.47, which is again a portion of the condo fee, is going to take place. In 2024-2025, it's going to go up by $36.33. And in 2025-2026, it's going to go up by $41.38. This is what a lawyer is reporting to you. Note the lawyer is not reporting to you in 2024, 2025, and 2025, 2026, the amount that your condo fees are going up, because there is this whole other component, say about 50% of the fees that are going to the ongoing needs, the gardener and everything else that we're not reporting on, but that will likely go up by 6 or 7% to account for inflation, 5% now. The other 50% goes up by much more, or can go up by much more than that. And in this case is right? It's going up by something much closer in this instance to almost 20% or 17 or 16% just based on rough math. And we're saying that that component of the fees are going to go up by this amount. And you'll see, take a look. Oh, there's the percentage. So it's saying that over these years, it's going up by 13.9%, the portion that is allocated to the reserve fund. And the job of the lawyer is to report that to the clients and to make it clear to the clients that that doesn't mean that there's a 13.9% increase in their condo fees, because it's not in their condo fees. It's only in the reserve portion of the condo fees that it's going up by 13.9%. Now, it's all well and good for a board to go ahead and, for a board to go ahead, hire an engineer and have the engineer come in and say, this is my recommendation. It is a totally different thing for the board to say that they accept it. There's nothing in law that says they need to accept the increase. And as a result, one of the fundamental things a lawyer needs to do is not only say, this is what the engineer has said will be required for the next 3 years of increases based on their 30-year analysis, but it is important for the lawyer to then say, and by the way, the board has approved that increase. And as you'll see, there's a line here that says the board has adopted the funding recommendation of the reserve fund study and will implement them. So we need to find that as lawyers, because oftentimes the board gets it and says, oh, no, 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 no. I know Jeff has been screaming about condo fees for years, and I don't want that. I know that they're saying 13.9%. I'm only going to raise it 6% this year. Well, you could do that, but reality has a way of saying that these are going to be needed. The reason the engineer is saying that these costs are needed is specifically because the elevators are going to break down regardless of Jeff's proclivities to paying their condo fees. And you can push off your fees, but it's going to come back and bite you. And so the job of the lawyer is to make sure that the condo is actually going ahead and abiding by the engineer recommendation, else it's just being put off to future dates. And if you're acting for a buyer, it's going to be the buyers who have to take it on at a later date. So that's the importance of the reserve fund. That's what we're doing. We're verifying that the reserve fund study has been done in a timely manner, that the engineer has been through and done their analysis, and that the condo has approved the reserve fund study, and we're reporting the amounts that the reserve fund capital account will need to grow by in coming years to clients for an average condominium unit. I'm going to pause. Does everyone understand what I said? Does anyone have any questions so far? Kat, you'll note that we're coming up to legal proceedings. You can see it. We're almost there. Anyone have any questions about the reserve fund study? No? Okay, fine. So,
Actually, quick question, Mark.
yeah.
Kirk Fournier here. Do you see instances where the board doesn't approve a recommended increase and then 3 years go by and then the engineer comes back and kind of says like, you're still not saving enough money? Like it's not something that goes away, right? Like it's not something
Totally.
that the board can say, we're not going to increase, and it doesn't show up somewhere because it was in 6 years have passed by and that report that they kind of
Not
decided
really.
to ignore.
No, because the engineer is commenting on physical degradation, right? And entropy being what it is, the scientific principle of entropy, things don't spontaneously go back to normal, right? They only get worse. I'm 48 years old. I'll attest to that with my body. They only get worse, right? It doesn't spontaneously make you back into a 20-year-old, and the elevators don't spontaneously fix themselves. So if the engineer is saying, hey, here it is, and if the board is putting it off, all they're doing is doing the same thing that a homeowner is doing when they look at their roof and see the shingles starting to fly off, and they say, I think it can have another couple of months. Well, yeah, it can, but things can get a lot worse, and it doesn't take them, then the shingles aren't getting any better. They have to be replaced. Someone has to absorb the cost of ownership.
But I guess conceivably it could be a different engineering firm 3 years later.
It
Can you
could.
remind me who chooses the engineering firm?
Yeah, the board chooses the engineering firm, which means that there is a bit of a incestuous relationship that exists between the engineer, where the engineer provides the board a draft report and says, are you good with this? Come on. Generally, if the board hasn't approved an engineering report, there is something significantly wrong, because the board has had both the opportunity to pick the engineer and to comment on the draft report, and the engineer and them have not been able to find a happy medium that can be approved. That usually speaks to a fundamental problem.
Okay. Would now be a good time to ask questions about, it might be something you're going to cover later, about the common reasons for special assessments? It seems like this is one of the major ones.
This is actually the biggest one. It's not because of the ongoing expenses. What's happened is either an engineer has not done their report correctly, thereby missing a massive capital expense that hasn't been budgeted, or a board has simply put off and not abided by the engineer's recommendations, such that the need continues and probably festers, and thus suddenly there is a capital need for new funds. A capital need can be funded in three ways. So say, for instance, the engineer has said for years, you have to address your balconies, and the board has said, we're not approving that. And suddenly one of the balconies falls. Happened at a condo recently. And now they have to do 16 of the balconies, but they haven't actually put aside the money. So it's both an engineering problem where they didn't actually put aside the money, and also they probably just disregarded the engineer for a bit. So now they have to account for 16 condo balconies to be repaired. Well, there's only three ways to do that. One is to raise your condo fees immediately and to allocate and fix them as the condo fees come in. Probably not a good option given that the thing fell. You need immediate capital needs. Two is to borrow the money from a bank, which negatively affects the reserve fund and affects the actual ability to get financing for the condo. And three is a special assessment, which is an immediate capital need in order to account for the immediate capital need of the condo. Think about it like a home ownership. If your house, if your furnace unexpectedly blows, it's 3 years old and it just goes out. All right, then there is a need for you to open your wallet and pay $5,000 and get a new furnace. And it's just, that's what you need to do. Same thing with the balconies, same thing with everything else. Make sense, Kirk?
Yeah, the thing I'm having trouble reconciling is that I see special assessments all the time. I mean, I don't know if it's just a perception thing. It almost seems like they're getting more common. Yet, one thing that's not very common is reading a staff certificate where it says the board has not agreed to the recommendations of the reserve fund study.
Yeah,
You know
no,
what I mean? So
that's fair. That's fair. So what you're saying is that there's a greater percent. I'm gonna stop the question here, Kirk, and I'll take it
Yeah,
afterwards.
sorry.
But let me just quickly
Sure.
answer. You're saying that there is a preponderance of people who are facing special assessments where they didn't get knowledge of those special assessments because the engineering work has been deficient, or because these things weren't grasped going forward. That may be true. Oftentimes, there is intense pressure on the engineers to say, hey, there's less money than is necessary to be acquired. And it's hard to verify whether that's happening at one of those condos. More regularly, though, the ones that have special assessments have clues. They have clues in the audited financials. They have clues in the form of the Form 13. They have clues in the raw number. Like when I see 603,856, I don't really say anything. But if I saw a building, and you'll see how many units are in this building in a second, we'll take a look together. If I saw a building that has 400 units and they only had $90,000 in their reserve fund, I would say objectively, this is a problem, even if the engineer is saying it's okay, because $90,000, I mean, that's nothing. That's nothing. That could be a home repair. And now we have that for the whole condo. Maybe we should have our eyes open to exploring further. So there are kind of clues, but there's not much more than that. We're doing our best with the information we have. Okay. With permission, and Kirk, if you have any other questions, I'm not meaning to cut you off. Feel free to just, you know my email. You speak to me all the time, so just call me up and we'll have those discussions.
Great, thanks.
Okay, so legal proceedings. Let's talk about that. Legal proceedings are particularly problematic for new lawyers and agents because no one really knows how to deal with them, but you will after I finish speaking. Let's talk about it. First off, there's certain, so what's the problem with a legal proceeding? The problem with the legal proceeding, whether, this is a critical point, whether it's the corporation that's suing someone or the corporation is being sued. A lot of people think it's the problem is only if you're being sued, right? Because then you have to pay out. Well, no, the problem is also if the corporation is suing someone, because what the corporation is meaning when they sue someone is this person has screwed us for whatever reason. We're out the money and we're trying to recover the money. Meaning that if they're not successful in the litigation against someone, then they're out the money, which is the same thing as losing, right? And someone has to make up for it. Who's going to make up for it? Well, it's the condo fee owners. So the reason it's a problem when there's a lawsuit is both because it falls onto the unit owners and also because if the litigation is significant, such that there may be a gaping hole in the finances of a corporation, CMHC starts getting involved saying, this is a problem for us. Let's go over that for a second. CMHC, as you're aware, is the mortgage insurer. The mortgage insurer insures mortgages with less than 20% down in this country. Meaning that if in fact CMHC says we are not insuring this building, which they sometimes do with substantive litigation, substantive, I'm talking like $8 million lawsuits or whatever it is. If CMHC is standing back and saying we're not insuring this building, well, then the only people who can purchase in that building are people who have 20%. And while that may be fine for your client, it may be the case that your client has 20% to put down. Remember that the client cares about what they're going to sell into, and supply and demand being what they are, basic economics, there are less demand for a product where you have to put down 20% as opposed to 5 or 10% because CMHC insurance exists. And so if a building has significant litigation, we care about it for two reasons. One, because the purchaser may have to actually backstop the corporation, because they do. It's a condo corporation has unlimited liability for its unit owners. It's different than other corporations. And two, we care about it because if the litigation is sufficiently bad, CMHC may blacklist the corporation, meaning that 20% down is a requirement. Accordingly, it is critical that a lawyer be reviewing and seeing if the litigation is fundamental to its solvency in a way that may affect CMHC. So what is fundamental to solvency? So we have two questions to answer when we deal with litigation. Firstly, how does any litigation affect my unit owner? Two, is the litigation big enough that I need to flag this for my clients and tell them that they sure as heck better make sure that CMHC is insuring this building before they proceed forward? Those are the two things we're doing with litigation. The first is done through an analysis of what the litigation is. So as an example, if there's a small claims court suit and it's a 100-unit condo, small claims has a maximum damage of $35,000. And thus, $35,000 is just something that any condo, even smaller condos, can easily take on. It's not going to affect their financial viability. And so I usually write, look, given the quantum of that court, it's not going to be a big issue. Then there are the $1 million claims or the $500,000 claims that are covered by insurance, slip and falls, dog bites, that type of thing. And if, in fact, it is an insured claim, making sure that the insurance is in order and that it covers the general liability of $1 million or $2 million, which all condos do because they usually have a $5 million minimum, is what is required. And what I do is I say, listen, there is this claim, but this is properly covered by insurance, meaning that the most that will happen is there may be some insurance premium increases, which is not likely to affect your condo fee very much. Contextualizing this, it's important. So far I've ticked off the easy ones so far. Kat's sitting here saying, give me the hard ones because I have big litigation here. What's going on? So when you have big litigation, here's how we answer it. Let's assume, as an example, that there was a $6 million claim as against the builder, the declarant, for construction deficiencies. Let's say that that's what was here, okay? Because we don't have anything here. Here we have something in law that says there's no problems. I picked something that didn't have issues. But let's say it had $6 million in litigation claims. Now, the very first thing we're going to do is you're going to say, listen, before you proceed, make sure your mortgage broker not has given you a pre-qualification. That just means that on the basis of your income, you're good for this. No, make sure your mortgage broker has determined that CMHC will insure this building. That's what you are going to say. but say, and if they have done so, what is $6 million to you? Let's say in a worst case scenario, the builder, let's use a maximal case. The condo is suing this guy for $6 million. And let's say they don't get back a cent. So they have to do $6 million worth of repair themselves. What does that mean to you, the unit owner? This is how we report on it. We go up and we see that we are unit 20, level 1, right? Then a lawyer should then go to the declaration. The declaration is the condominium constitution. It's the constitution that's put on title, where you then understand the nature of how it all breaks down as between people. So we already know our unit number. And so we're going to go to the declaration, this document that everyone ignores routinely, but shouldn't, because it's actually quite important. And I'm just going to try to find it. Just give me a second, please. I'm going to show you exactly what I do in these instances. Sorry, guys, this is a big document and it's not going fast. Just give me a second. I think it's because I'm sharing it. I'm going one page at a time of like a 300-page document. Just bear with me. Weird. I would have expected to see it already. Did I miss it? I think I missed it. Just give me a second, guys. I'm just going to stop sharing just because it will make it quicker. Sorry, 1 minute, please. And then I'll bring you back once I've found it. Hold on, please. One more second, guys. Hold on. Where is this? Don't tell me I picked the first condo in history that doesn't have it. Hold on. Where are you? Oh, here it is. Ha ha ha. Got it. Okay. So, in the declaration, in every declaration, there is a Schedule D. And Schedule D has the percentage contribution to the common expenses. See that? Really helpful. Now we're unit 20. So here it is. And that means that we are at 2.631579%. So let's assume that we have $6 million that the condo is going to owe. I take $6 million, so I literally put it into a calculator and I multiply it by 0.02631579, and that brings me to $157,894. Now that's extremely hot. Wait, that can't be right. It should be 15,000. I did it wrong. It's $15,789. And what I'm able to then say is I can say to someone, do I have that right? Just a second. Just want to say, this is a small condo. So it's like, there's only 38 units in this condo. So it's possible that there's significantly more, times 0.026311579. I'm sorry, it is 157,000. It's $157,894. So if this condo was sued for $6 million, then I would be able to say, listen, you need to verify as against CMHC that this is still an insurable product. And once you do, if you do, and this condo owes $6 million, be aware that that translates into $157,894 per unit, meaning that if every unit paid their percentage to the common element expenses, in this instance, it's all equal, then everyone would have to come up with $157,894, and boom, the $6 million would be accounted for. In other words, we have contextualized what the litigation is in raw cost. Now, in every single time that I've had major litigation against the condo, I have never contextualized $157,000. Usually when you contextualize, particularly against large condos, you'll find that it's like a couple of $1,000. $3,000, $4,000. And by putting this in, if your client is actually on the fence and saying, oh my God, $1 million, that's so much, you could say, yeah, it's a lot because we don't have that in our checking account. But there's 600 units in this building, and contextualized, it means that every unit is responsible for $2,300. CMHC will probably not have a problem with that. Take off $2,300 from your price. In a worst case scenario, you've already gotten that discount. You're good to go. Good, here we are. And that's the way you can explain legal proceedings to clients. Note, at no point did I tell them to proceed. That wasn't my job. My job as a lawyer is not to tell them to proceed with this. My job is to quantify risk. It's not a risk for them if it's a small claims because of the quantum. It's not a risk for them if it's an insured product beyond some increase in their deductible. It is a risk if it's something else that I've contextualized on a per unit basis for them, and I've guided them into making sure that they can get insurance before they waive their status certificate. All right, I'm done with litigation. I see that there's some questions. Let me see. What are the questions? Oh, that's a question from before. I'm sorry. Okay, anyone else have any other questions for me on litigation before I move on? Keeping in mind that it's 10:48.
Just so in the status certificate, like the simple document that everyone gets, that
Yep.
loss of information isn't there. Where do I go again to find that? Just so I can.
So there. Well, I'm almost there, Kat. I'm almost
Okay,
there because we still have to do the audited financials. So there's two
Okay.
different documents where the litigation may come up. One
Okay.
is the status certificate. Remember, the status certificate is done as of usually the current date. In this instance, it's November 1st, but it's always within usually 60 days that we get them. So this is going to have the most recent discussion as to whether or not there is litigation. Remember that the condo is bound. If there is litigation and they don't mention it, there is liability on the condo pursuant to Section 76. You can rely on this. The other place that you would find information about ongoing lawsuits is in the audited financials. But recall that the audited financials have two deficiencies in highlighting litigation. One is that the audited financials are often from up to a year and a half ago. So if litigation has happened since then, you're not going to see it. Two, it may mention litigation that has since settled because it's from a year and a half ago, up to a year and a half ago. So you can find this both in the audited financial notes, which we're going to go over, or you can find it in the status certificate itself. And you can rely on the status certificate itself to tell you, because in the event that they do not inform you and there is litigation, there is liability on the condo itself for failure to disclose that information. Okay? All right. Now, let's turn our attention, because we're coming to an end, to the audited financials, because that's the other big one. So far, we've talked about the budget briefly. We've talked about the Form 13. We've talked about the litigation. We've talked about the reserve fund study in the Form 13. Now we're going to talk about the audited financials. If you think about it, the job of a lawyer is to tell you that the condo is doing its job properly. How do we do that? Well, we say, okay, there's no litigation. Okay, here's what here's the breakdown of the unit. Here's the breakdown of the condo fee. There's no litigation against the property, or there is, and it's contextualized. The reserve fund study has been accounted for every 3 years. No problem. And to boot, the corporation has gone ahead and approved it. But there's one missing component, because it's all well and good that an engineer has come through and said, this is what you need. And it's all well and good that the condo said, yep, we intend to do that. It's a totally different thing that the condo has done it. Sometimes there's theft. Sometimes there's mismanagement. Sometimes they just don't achieve what it is they've set out to do. And it is for that reason that we have the audited financials. And the audited financials are these documents. Every condo that has more than 25 units in it must have independent financials. And the first thing that a lawyer needs to understand is reporting on what makes for valid audited financials on a date basis. Because The audited financials in this instance are as of April 30th, 2022. Would that be valid today? Remember, this was from a status certificate done in November, so it's different. But if I got that today for a status certificate that was dated January 2024, I would say this doesn't work. Why? Because I know that there are more recent audited financials that should be supplied. Why? It is a rule in tax that everyone needs to file their taxes 6 months after their year end. These audited financials are done at the year end point. What that means is that April 30th, 2022, they filed their taxes 6 months following that. May, June, July, August, September, October. October 31st, 2022, they filed their taxes. And similarly, they would have filed their taxes October 31st, 2023 as well, meaning that there is no chance that they do not have the April 20th, 2023 financials as well. And yet what they have supplied us with is the April 20th, 2022 financials. And so what I would write back in this instance is I'd say, you have supplied me with the April 30th, 2022 financials, but it being January 1st, 2024, I know that the financials can be no more than a year and 6 months behind this date. April 30th is more than a year and 6 months behind this date. These are not the most recent financials. Get the most recent financials, please, from the condo, and I would be pleased to review them. The reason you want the most recent financials is because financials are important. There are basically two different types of review. There's three different types of reviews, but for the purposes of going forward about financials, there's two. One is a notice to reader, which is just basically an accountant that basically says, give me information and I'll just assemble it. I won't verify it. An audited financial report means that they have been supplied with the information and then they go into your office and they say, okay, line 3 that you gave me, I want to see the source document. Okay, now line 156. I want to see the source document. And they pick out random source documents in sufficient volume that they can tell that there hasn't been tampering. And on the basis of that, they say you can rely on these numbers. And the reliance on the numbers is important because a basic financial statement consists of several documents, but two primarily. I mean, it has more than two, but two are very important. One is called the balance sheet, which is literally like what's my net worth? That's what it's answering. What's the net worth of the condo? On balance, all of its assets versus all of its liabilities. If it has a loan, that's a liability. What's the net worth? Point 2, it's the statement of cash flows, the income statement, excuse me, not the statement of cash flows, the income statement. And the income statement is basically saying, thank you very much. What's my revenue minus my common expenses, showing what's my fund balance. Is it going up or is it going down at the end of the year? This is a story. This is a story which, if everything has been perfect to date, you can just kind of look, make sure that they're largely in the positives and make sure that they're continuing between 2021, 2022. There's no big discrepancies and you're fine. But if you found deficiencies in the stories, if you found that there is a low reserve fund, if you found that the engineer's study is calling for huge increases or whatever it may be, when you start looking through this, you can really delve down into what is happening in the condo on an annualized basis. The balance sheet will tell you where things are based on the history to date, but the income statement will tell you where things are and where they are headed in the immediate term, both for the reserve fund and for the operating account. Remember, they're operating two different bank accounts. And the stories are better illustrated in the notes to the financials, which all lawyers and agents should be watching. The notes to the financials really highlight those things that provide material risk to the condo. So if there was litigation, Kat, then you would expect to see it as of April 30th, 2022 in this instance, in the notes to the financials, because in the event that they lost the litigation for $6 million, which I made up, it didn't exist in this place, they would note that and they would say, this is a material risk to the condo and we're flagging it. And so this is another place that is always reviewed by a lawyer as against just the raw numbers themselves, which again, tell the story of everything that you've discovered to date. I usually check out the audited financials last in one of these sessions. Now, I know we're going I'm hitting my end point here, and I want to leave 2 minutes for questions. But I would mention the rules are things I never really review unless asked. Instead, I get the rules and I say rules contain important things like, as an example, whether you can lease, whether you can have certain pets. Please read through these carefully, and I just provide them. I don't even really read them usually. There are two different, but in talking about rules very quickly, there are two different sources of rules in the condo, just like there are two different sources of rules in our government. There is the laws passed by the legislature, and there is the Constitution of Canada. Similarly, there are the rules that are passed by the governing board of directors, and there is the Constitution, which is the Declaration. And the Declaration does contain certain things that may not be in the rules. So if a client is asking detailed questions as to what they can do and what renovations they can do with the condo or anything else, then you will usually find that answer here in the declaration, if not in the rules. First, you check the rules and then you check the declaration, and you'll see that there are any number of restrictions that are contained here as well, which basically state that whatever rules the directors are making, they cannot make rules that are not in conformity with the declaration itself. So guys, I have 1 minute left. I'm going to call this a bit short. Well, not a bit short. I'm going to leave 1 or 2 minutes for questions. And let's go forward. Susan asks, and in that case, they have insurance for 5 million. Well, no, Susan, the insurance covers only certain events. It doesn't cover construction deficiencies. It doesn't cover fraud from management. So contextualizing what the litigation is important. If in fact the $5 million lawsuit is for a slip and fall, then no problem. That's covered by insurance. But if the $5 million lawsuit is for a deficiency that is not covered, then it's the job of the lawyer to tell you that this is not a covered event. Thus, CMHC needs to be engaged. And this is what the potential is. Khadija writes, is there a way to know if there's enough for the number of units and the age of the buildings? No, Khadija, there is not in an absolute sense, but you can in fact use logic. As part of every declaration, there is usually something that expresses how many units there are in the building. In fact, you saw it before in Schedule D, where I showed you there were 25 units, right? You can either find it in the actual, here we go, there it is. So here it is, and you can see there are 38 units in this building. And so you can basically use your knowledge and say, well, there's 608,000, the building is this old, and there is 38 units. So you can use some logic there, but no, there's nothing that tells you if it is absolutely sufficient, nor is that our job. That's the job of the engineer, and all we can do is say that the engineer has done their job accordingly. All right, one last question. Who wants to ask me the last one verbally? Unmute yourself, ask the last question, and then we'll call it a day.
Hey, Mark, it's Sandeep. Just quick question. Now that in Toronto, most of the buildings are like twin towers and they share facilities and common elements, would
Yep.
they also share insurance liabilities or reserve fund studies, or would they all be independent, and would it indicate in the status certificate somewhere?
Oh, so that's a good question. I didn't touch on shared facilities. So shared facilities are, let's say you have two condo buildings and you have a pool between them. The pool would be a shared facility as an example. That shared facility has a separate reserve fund study, separate insurance, separate audited financials, all of which is reviewed by a lawyer.
Thank you.
No problem. All right, guys, listen, it's a pleasure. We had really good attendance today. We blew past 100 unit users. I will be posting this shortly on Facebook. Thank you all for being part of this. And we are starting our sessions. So look forward to the next ones. We are going to have them shortly. Have a good one, guys.